This isn't your usual market snooze, it's the kind of Wall Street soap opera that explodes through chat rooms, wakes up institutional desks, and turns CEOs into meme material. Supermicro, SMCI, the backstage engineer that bolts the world's hottest chips into working racks and desk-side supercomputers, saw its shares plunge 13.5% in December, a drop that slammed into the headlines and left traders wiping their monitors. That number didn't appear in isolation, it's the punchline to a story about hype, supply cycles, hyperscalers, and the very real possibility that the AI gold rush might be more of a fever dream than a lifelong subscription. The tumble, what happened in December, and why everyone gasped. Picture this: markets are frothy, AI-themed trades have been handed out like hotcakes, and Supermicro rides the wave because, in the simplest terms, it builds the stage for AI's rockstars, chips from NVIDIA, AMD, and the cloud providers buying racks. Then, in December, things turned sideways. The stock sank 13.5% that month, a visible crack in what had otherwise been a moonshot rally for SMCI. That decline ripped open a few painful questions about demand durability, order timing, and whether the industry's biggest customers are hitting the brakes. Why the panic? Several reasons mashed together: profit-taking from investors who'd ridden an epic multi-year run, worries about an oversupply of AI chips, and headlines about slowdowns or cash constraints at major AI buyers. When the narrative turns, from supply-starved to supply-glutted, middlemen like Supermicro get the cold shoulder first. They're the last link to receive orders when the band decides not to tour. Think of stadium tickets selling out overnight, chips, then promoters delaying the concert tour because the headline act says, "We'll wait for the new setlist, next-gen GPUs." The ticket vendors, Supermicro, get stuck in the middle: paid ads, stage crews, but fewer shows to run. The 5-year rocket, nearly 1,000%, then a reality check. If you zoom out, SMCI's run is absurdly impressive, nearly 1,000% gains over 5 years for shareholders who timed it right. That kind of performance turns early employees into quiet millionaires and shoves the stock onto every growth radar. But here's the twist: the stock has also fallen over the last 12 months, and the late 2025 slide exposed how quickly sentiment can flip when execution or demand wobbles. Think of it like a startup's meteoric rise, from dorm room scrappy to IPO hero, and then a sudden pivot where investors want to see repeatable quarterly kneecaps, not just the vision. The 5-year number makes great clickbait, but the 1-year decline tells the tale of cooled expectations. Explosive past returns make the future expectations giant-sized, and when expectations are giant, even tiny misses look catastrophic. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Supermicro's business model: the middleman with a soldering iron. Let's be blunt, Supermicro is the systems integrator for AI. They don't make the GPUs that everyone worships, they assemble them into deployable systems, from hyperscaler racks to desk-side workstations and compact edge boxes. They design the chassis, wrangle the power supplies, engineer thermal systems, hello liquid cooling, and validate the networking that shuttles petabytes between chips. In other words, Supermicro is the company that turns hot silicon into useful infrastructure. When the AI build-out was a tidal wave, Supermicro surfed it. When the tide ebbs, they're painfully exposed. Imagine a chef world-famous for plating Michelin dishes, chips. Supermicro is the restaurant that buys the ingredients, hires the line cooks, renovates the kitchen, and makes sure every dinner service doesn't burn down. If restaurants stop ordering prime beef, the kitchen company still has staff and bills. Money matters: $21 billion run rate, $36 billion guidance, $18 billion market cap. Now connect the dots. Here's where the spreadsheets and drama collide. Supermicro reported roughly $21 billion in revenue over the last 12 months, a massive pile of revenue for a systems shop. Management laid out a bullish target, guiding toward $36 billion in fiscal 2026 revenue, a projection that blew past conservative expectations and helped justify earlier high valuations. And yet, the market cap sits near $18 billion, which superficially makes the company look cheap relative to projected top-line volume. Sounds like bargain hunting time, right? Not so fast. Here's the catch. Supermicro historically operates with thin gross margins, roughly in the 10 to 15% band, which means even huge revenue doesn't automatically translate into fat profits or free cash flow. If you're a middleman with thin margins, the math of scaling up revenue doesn't buy you the same multiple lift as a software firm with 80% gross margins. So that $36 billion promise looks shiny on the top line but needs scrutiny under the hood. It's like being offered a mega pizza, tons of revenue, that you only get to keep 10 to 15% of, still nice, but not a ticket to Yachtville. The CoreWeave saga, why AI cloud turbulence matters for Supermicro. Remember when a panic at one domino causes nearby tiles to wobble? That's what happened with CoreWeave and a few other specialized AI cloud providers in late 2025. These companies are customers and partners in the AI infrastructure ecosystem. When some of them faced financial strain, debt issues, or sudden downgrades, markets started sniffing for contagion. Stocks like CoreWeave plunged, fueling fears that AI infrastructure demand might be weaker than the hype promised, and that fear bled into suppliers like Supermicro. If major customers pause build-outs, delay racks, or renegotiate terms, it cascades, chip orders slow, integrators lose placement windows, and inventory accumulates. An oversupply of GPUs would be the worst-case scenario for Supermicro. Quantity of chips doesn't mean quantity of installed racks. Is CoreWeave an isolated scare or the first tremor of systemic cooling? The market's December reaction suggests investors are betting on the latter, at least until proven otherwise. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.